Hello, my name is Steve Bigelow with the Candlestick Forum. The stocks to watch this week are pretty much on the bearish side. This week we saw the market have a big move up after the Fed announcements, but one of the common aspects of reactions to Fed announcements is they produce big whipsaws. This is more from the voice of experience through the years of seeing a big move after the Fed announcement and getting all excited and rushing in. And then quite often the next day, they slam it right back down, which puts us right back into one of the basic candlestick trading rules. As long as you're below the T line, you're still in a downtrend, which we saw on Friday. They were still trading lower. Same scenario on the NASDAQ. Big move to the upside. So this is where common sense confirmation of candlestick signals comes into play. If we saw a big reversal signal, in this case, a doji sandwich closing above the T line, what did we want to see the next day? Positive trading. The fact that they gapped it down and started trading it lower immediately told us that that was a whipsaw knee-jerk reaction. The trend was still in progress as long as you stay below the T line. So there's not very many sectors trading positive except for the energy sector. Everything else is not everything else. There's quite a few good trade setups because of the bearish J-hook patterns. We recommended Valero because of the J-hook pattern a few days ago, a couple weeks ago maybe. You can see wave one, wave two, and a not uncommon aspect of a J-hook pattern is if this was your trajectory of the trend, the J-hook pattern shows new strength. Now you have a new trajectory. We recommended BPT. This is what we call 2+2 analysis. Get a morning star signal right smack dab at the 50-day moving average, gapped up, confirming the morning star signal through the T line, breaking this downtrend. And we're pretty it was pretty observant or observable that the oil stocks were still acting strong. Notice what this did when the market sold off well over 1,000 points over the last 2 days. The oil sector or the oil stocks were still trading positive. So which ones do you buy? We're going to be doing a session this next weekend on kicker signals. Notice the trend kicker signal where they opened here, closed here, gapped up to the open and went the opposite direction and breaking out. There's a very simple assumption based upon a trend kicker signal. There's going to be more upside. Now the patterns are working. We recommended shorting PayPal. Notice the little bearish kicker type signal creating a bearish J-hook pattern. It sold off more. If this is wave one, wave three has the same prospects of that same magnitude of the move. MRTX, wave one, wave two, and notice where wave two failed. Back below the T line with a bearish left-right combo. And then Friday, it opened lower and continued to trade lower. Wave one, wave two, wave three. Take a look at all these. These are all in the prospects of either already confirming a bearish J-hook or on weaker open would be showing a bearish J-hook pattern. So join us next weekend. We're going to be doing a Candlestick Forum mini spotlight training. These usually last, and they're supposed to last an hour. They usually go for 2 hours. But we're going to illustrate the three kicker signals, both bullish and bearish. We recommended INFU. Look at the trend kicker and look what it did on Friday, Thursday and Friday, when the markets were going the opposite direction. What we're going to be illustrating is the strength of signals, or one of the strongest, if not the strongest candlestick signal. And there's three different types of kicker signals. So join us, because as long as this market is in a downtrend, your patterns are going to be working very effectively. That'll be it. We'll see you in the chat rooms.